Ladies and gentlemen, good day to you anywhere you're listening. I'm Yemi Olaleye, a market analyst, and this session is powered by Investlo. Investlo is a gateway to trading. Hi traders, it's a wonderful opportunity again for this week, and we'll be looking at how we can milk the market for the month of November 4th to 8th. So we're starting with the fundamental outlook. On Monday, 4th of November 2024, there is no high impact news of the red folder on the Forex Factory, which we're using for the fundamental analysis. Going to the Tuesday of the week, we have from the AUD to the US dollar to NZD coming up from 4:30 a.m. Nigerian time till 4:45 p.m. Nigerian time. These are all our impact news with the cash rates from the AUD, with the ISM services PMI on the US dollar, and the employment change quarter by quarter by NZD. So all of these news are high impact news, which may likely impact what the market will do on Tuesday. So ideally, the Monday might be a little bit dull because there's a lot of movement that is expected to happen on the Tuesday of this week. And on Wednesday, of course, we have the Great Britain pounds and US dollar. No, sorry, on Wednesday, there is no news. Of course, on Wednesday, there is no news. And on Thursday, we have multiple news from the Great Britain pounds and US dollar. So that means on such day, it should be advisable for you not to trade Great Britain pounds USD if you are not too conversant with the fundamental outlook, because that tends to be a lot of spikes or a lot of consolidation in that market on that set date. Great Britain pounds will be having the BOE monetary policy, the monetary policy summary, the official bank rate, and of course, by 2:30 p.m. Nigerian time, US dollar will be coming up with the unemployment claims, the federal funds rate, FOMC statements, all of that will be coming up later in the day. So that is going to be a fantastic day with plenty red folder news in the market. And on Friday, we have just two outcomes, which is from the Canadian dollar on the employment change and unemployment rates coming up 2:30 p.m. Nigerian time. These are the outlook for the week, and this means there's going to be so much impact news for this week that we are moving into. And at best, it's important to remind ourselves as traders not to overtrade on this path. So if you could not understand or interpret what the fundamental outlook is all about, it is safer for you to leave that chart alone and let it be. All right, continue with the outlook for today. Let's start with the technical outlook on DXY. Looking at the DXY from monthly time frame, what we've seen here so far was October was a very bullish momentum for DXY, and this month has, of course, continued in that same energy. But how well would this be? Will it return anywhere from now? So let me take out the previous analysis. So how well would this really move? So we're expecting this to move in a particular dimension, and this direction is above the current market price or below the current market price. So this is how we're going to check it out. One, this is struggling with a massive bullish momentum on the monthly time frame. That is understandable. Two, let's check what this means on the weekly time frame, which is the week expecting to start seeing a bearish movement on DXY in the last week. And of course, I remember I was actually still waiting a little bit for this movement to be around this price level. If the market is coming here to take out this previous high before the bearish market, the bearish movement will continue. Something like this, and something like this. Okay, so because ideally it is very, very important to know how the markets move. And so far, so well, you could see that this has been a massive bullish momentum with price inefficiencies all below those price ranges. And then what we can see from here is that the market has created a weaker momentum for the last week in the buy direction. And then we can only see one inefficiency just around that price level, which is the candlestick for the 4 weeks ago and the candlestick for the 2 weeks ago, which was doing an imbalanced price level at this price range. So it will be easier for me to anticipate a sell momentum or a sell movement into this price range before I see a buy opportunity right there. So this is my outlook on the DXY weekly time frame analysis. And let's further see that on the 4-hour time frame. Let's see what we can gather on the 4 hour time frame. So on 4 hours right there, it looks more of a bullish outlook for me. If I'm looking at what the market is doing right here, after the liquidity was grabbed at this below price level, look at it here. At this price level, sorry, let me use this tool. This is quite easier. Okay. So at this price level here, we could see that the liquidity was grabbed below that price range. with the last three candlesticks before the current one, the last closing candle for the last week, which was here. So the candle you see there, it's actually wiped and swept all the liquidity below this price level, which was the previous lows that has been established. And once the market did that, it moved into the upward direction. What will come to your mind next is it's targeting the next high right here. So because this high is also another high level in the internal liquidity, which means we can be waiting for the market to only do something like this back into this price range for efficiency before this happens. Okay, this is my outlook on the XY for the 4-hour time frame. So monthly to 4-hour time frame suggests that we may likely see more sell in the market, but then we expect the market to likely go into a bullish direction to clear the high above it before we see that sell, because it's been a straight massive bullish momentum all the way from a few weeks now. Can you see that? Can you see that? All this week. So it might just be targeting this price level, take it out and come back into this price range before this will happen. All right. So that is for the DXY. Let's see what we have on the EURUSD dollar for this week. On EURUSD dollar, starting for the monthly outlook, this looks bearish on the monthly outlook. This looks very bearish on the monthly outlook. So with this outcome, it means that we can be waiting, just like last week analysis I made, I'll be anticipating EURUSD to come to a lower price range like this to clear it before I see more bullish momentum right there. Because all along, all this price level looks like range at the end of the day. But let's further see more insight on that on the weekly outlook. Now, for the past 4 weeks, it's been on a sell mode, and last week managed to form a bullish momentum to a price level. So why did we see that? Well, when you look at the market, when you look at where we have let me see that. Okay, where we have that accumulation range at the lower price level, the price was just near to that price range. And with this, we can only be waiting for the market to do a little bit of sell. Ideally, as for me, I'll be waiting for more sell opportunity in this market because the buy looks more like I'm coming. Let me check the chart again. I want to take out this tool. Okay, good. So with what is looking on the chart now, it has actually cleared. There is an imbalance right here. This imbalance level is from this price level to this price level, which was about, I think, okay, 1.0899 to 1.0873. And with last week, we saw how the market went through to that imbalance price level, wiped through it, and it closed at 1.0831. And this only tells us that the market seems to do more bearish momentum for this coming week. And you can see on the daily time frame, last week Friday ended as a bearish candle, which actually engulfed totally the previous day candle and more than 50% of the Wednesday daily candle. And that only tells us that we can be expecting more bearish momentum in the market to clear this previous low. And from there, the market will likely come to this price range, just like this. This is around 90 pips or 100 pips on the average. And when you plus that to the current market price, it's about 140 pips in total. So the market can draw through next week before we experience more buy in this market. For me, I'm still seeing an opportunity for a buy to get to a price level like this. Okay, to do something like this. But then with the bearish print that we have last week, it looks more like the market will continue in a bearish direction. Or we can see something different, a little bit different on the 4-hour time frame, which is we can expect this level to play out as a level that has been broken in the market, just like to do a little bit of this retracement and break below this previous low right here. All right, this level here. So this is on 4-hour time frame. This is on 4-hour time frame. So this is very possible too. And then don't forget, Monday may be very dull, maybe not, but then Monday may be very dull. I'll wait for more confirmation to jump on this trade. Right here, it seems that this is a powerful bearish momentum into this direction right here. But then I'll wait further for more clarity before I jump on that trade. But this is the current outlook that the market is leaving for us to read. And this is the interpretation thereof. And let's see what we have on the Great Pounds US dollar on the monthly time frame. On the monthly, yes, last month was a powerful bearish momentum candlestick in the market, and this week looks more like it will continue with that same energy. And of course, this is the level I'll be expecting that to get you right here, this price level here. And the market nearly got to that price range for this month before we have that little retracement. So now, what is the next thing we'll be looking for to see on this chart? Is to see how the sell will play out or how the buy will play out. So let's go to the weekly time frame outlook. For the past 5 weeks now, it's been on a sell 1, 2, 3, 4, 5, 6. Okay, 5. 1, 2, 3, 4, 5. For the past 5 weeks, the Great Pounds US dollar has been on a sell momentum on the weekly time frame. And when you see that, it means it's not leaving any inefficiency above this price level, which you can see. The only one we have here is very, very much, which is very high to the current market price, which was more than 250 pips on average. So that means if we're going to experience a buy in this market, we will experience the buy from this price level into this price level, about 250 pips movement into the upward direction, which will be a premium price run to sell again in the future. But then, when you currently look, what does this mean on the lower time frame? So let's see our buyers on the lower time frame. Let's see what that means. On lower time frame, ideally, with this range in the market, with this swing in the market, with this impulsive move, we have another impulsive move right here to the upside, a retracement, which is less than 50% of this movement, meaning what? This is more of a bullish momentum. Then a break of structure into this price direction. Then, of course, the market came back to break the previous low level. And ever since then, the market has retraced and retested that price level to form more bearish momentum right here. Can you see that? This has been taken out, has retested, more bearish momentum. So that only tells us that we can be waiting for when the market will come to a price level where there will be an opportunity to grab liquidity. And that was on Friday. The market went there. Look at this. That was on Thursday, rather. Thursday. The market went there on Thursday. And from what we've seen so far, the market was able to grab some liquidity from that price level right there. If you can see that, the market grabbed some liquidity in that price range, which is there. So with this candle, it has grabbed the liquidity to the upside, but then the market showed more bearish momentum into that direction again. So which means we're not going to fight with that. We're going to cope with what the market is showing us. We're having two opportunities here. We've seen the sell opportunity heading into a buy. We've seen the buy opportunity right here. Market is stuck here. And of course, when you look at this from a perspective, it's a ranging market, but in a downward momentum. This is more or less a trend line liquidity in a downward momentum. So what will be the outlook of this? Let's check the 4 hours. On the first time frame, this looks very, very unclear as well. And then we can only wait for the market to give us just a signal, which is to buy or to give us a sell signal. From this range on the daily, it is already a buy. And I told you from the weekly outlook, it will be a massive buy into a price range like this before we can see a sell opportunity. Look at this now. I don't know if this makes sense to you, but this is what I'm saying. Can you see a trend line liquidity to the downside? Previous low price level has been broken, retested. Market moved back into where a buy opportunity should be found, which started right there. And what is the next thing in the market? Expecting it to move straight into this price level, which is about 250 pips on average before you see a sell, which is about 280, about 300 in average before you see a sell opportunity, or you're going to keep a sell on this market. So that means I'm going to wait. I'm going to see more reaction in the market before I take my shots on this particular trade. Okay, this is £10 US dollar. And let's see what we have on AUDUSD. On the monthly time frame, AUDUSD monthly time frame. All right. For the last month, it was a massive bullish momentum, just like this. This month has shown a great energy to continue in that direction. And of course, as I said last week, I'm expecting the market to come to this price level to break through. This is about 270 to 296 pips on average, where I'm expecting the market to play through before there will be a more reasonable buy opportunity in this market. So this level will be an inducement level, which I'm expecting the market to take out in the future. Where I for. All right. So this is the outlook on monthly time frame. So we know our bias to be for a bearish movement before we have more of a bullish movement. So that being said, on the weekly time frame, this looks more practical that we can wait for a buy opportunity here at this price level, because this was the last candle that we saw. We'll call this a breakout block right there. Okay, we can wait for the market to come to this price level right here and continue with the sell. So which means we can be expecting more buy on AUD US dollar, which may do about 75 pips into this price range. Then we can sell from there. This is what it looks like on the weekly time frame. Let's check the daily. Let's see if we have a better opportunity from there. On the daily, the information remains the same. This level was taken out completely, and this is the only time we can wait for more movement into this price level before we can take another buy. Ideally, I will not be going to this price level to expect a buy. I will not be going here to expect a buy. I can only come here to expect a buy. Otherwise, I will only wait for the sell to keep going massively till this level is taken out. And when this level is taken out, I'll be looking for a buy from above this price range, below this price range, below 0.6269. That's what we're waiting for. Okay, let's check the 4-hour time frame. On a 4-hour time frame, we've seen that this has been a massive bearish momentum for a very, very long time. And the last candles we saw right there, what have they formed? They formed a series of ranging market. So right now, what are we expecting the market to do? To break out of this zone. We expect the market to break out of this zone and move in a particular direction of any of this angle we've analyzed on a higher time frame. So this means we are not forcing this market to form. We are waiting patiently for it to form. If it breaks above this price level, we're expecting to go into this price range, and then we can expect more sell from there. Certainly, candlesticks financial patterns will tell us when to sell with that information. Okay, let's see what we have on USDJPY. Let's see USDJPY today. Okay, analysis has been buying USDJPY, just that I did not sell as much as we expected last week. I think, yeah, that was last time we analyzed it, but it went to the price level we analyzed actually though. Okay, let's check the monthly time frame to keep it simple. So this looks bullish with the outlook from last month. It still looked very, very bullish. But then let's see an opportunity on that on the lower time frame. Since last month of October was bullish, and this is also a very bullish one. So what can we be expecting? Are we saying we are waiting for this market to come to this price range? Are we expecting the market to come to this price range before we see a sell? And when it's going to sell, it's going to break below this price level at 139.754, which is about 1,000 pips ahead. But that's in the future. Let's go to the weekly. Let's make it more realistic. Okay, this has shown a bullish momentum right here too. A potential inverse head and shoulder, as you can see, right? But then let's see what the market is tending to do. So it's for sometimes, and now a bullish momentum is heading into this direction. Do we have any efficiency around that price level? None. We do not have any. So what is likely going to happen after series of buying for the past 4 weeks on this below this price level right here, which is the anticipation we have that the market will likely sell back into this price range, give us another opportunity for a buy from there. So where is the buy going to be? 151.39 around that price level, 151.086 around that price level. So it's easier for us to wait for a sell momentum, a sell movement into this price range to expect a buy than to jump into this buy itself. Because basically, as you can see, this market has gapped for some times, it gapped again for some times. So this is on the weekly outlook though. Let's see the daily time frame. Let's see what we can do with that. On the daily, this has been acting funny for some time now because look at this. For the past 1, 2, 3, Monday, Tuesday, Wednesday has been on the massive consolidation, which was very, very much. But at the same time, consolidating, showing an impulsive lower lows and lower highs, lower lows and lower highs, telling you that it only comes to where there is liquidity to grab it and most likely to tap away from that same zone into more buying direction. And when it's buying to that direction, it's going to a premium price level. We'll be selling in the future. So we can only be waiting for a premium price level now that looks more with high probability where we can sell in the future if we cannot buy when this market comes back into this price range. Ideally, it has tapped into the range. You have not been in this buy. It is better you wait for the market to come back into this price range at 150.774. Then you wait to buy from there. That is on daily time frame. The last time frame we're going to check will be on the 4-hour time frame. On the 4-hour time frame, this looks like, in fact, this looks more like head and shoulder pattern, which is not really clear yet, but then we can see the momentum, we can see the lower highs and lower lows. We've seen what the market is creating along all those price level. And right here on 4-hour time frame, could it be possible that the market is only trying to, I'm coming, I want to check this thing out. I'm coming. So I want to remove this. Okay, so could it be possible that on this 4-hour time frame, the market is trying to create something like this, whereby it's going to create a higher momentum in the market, take out this high and sell back into this. Now let's check that, analyze that on your own charts, and let's compare. So the idea is there is so much fundamental coming up this week, so the market can move in any direction. And in all of these currency pairs, majority of them have both opportunities for a buy and for a sell. And some of them are not even looking clear in any particular direction. But the idea makes it better is from looking at higher time frame. So it still gives us a little bit about where we have high percentage in the buyer's direction, in the directional bias, so to say. So with this now, on 4 time frame for USDJPY, this may be what we should be expecting, just like this. On higher time frame, those that can wait better, more than on trading opportunities, they can wait for the market to do more of that sell into this price range. But it seems to me that it has tapped already into the buy. And I'm thinking, with what I'm seeing here, I'm seeing it to move most likely above this price level before it will jump to the lower price range. So that's the outlook on USD JPY for this week. Let's check one more. Let's check gold. And I think gold should be the last one. Let's check gold. Basically, on gold, right there, it's been a massive bullish momentum. And from what you can see here, the last month was a bullish one. And currently, this month is looking bearish on my chart. And does that mean it's will come back to this old price level right here where you have this imbalance? I'm not sure. It's not certain. I'm not even sure gold will do that. Okay, gold may not likely do this. Okay, so let's see the opportunity on weekly. Let's see what gold may likely do on the weekly time frame. This look more refined on weekly time frame, whereby you can expect the gold to come to this price level and do something like this. That's also, is it possible? Is it feasible in the market? Let's see together. So let me take out this. How many pips is that to the current market price? That's the first thing. That's about 500 pips into that price range. So which means a sell opportunity is looking serious on gold for retracement before it will take out the previous all-time high at 2789.65 on gold. But on daily time frame for gold, let's see what opportunity we have. Last 2 days on gold happens to show us a bearish momentum. And for the Tuesday, Wednesday, Thursday candlesticks formation pattern showed us an evening star, which is a signal for a buy. Then the last day of the week, which was a Friday, showed us more or less like a shooting star on that same distribution zone. And with a long upper week, which serves as for rejection, we've seen that the market has closed and ended the week with a bearish momentum. So what can we be expecting for this new week? Ideally, as it looks like, this sales will continue much more briefly. But then to what price level are we expecting it to happen? At this price level here, we can be expecting that to happen. Let me take out this completely. I'm coming. I want to take out this rule. Okay, good. So we can have something like this. We can have this kind of movement, take out this low and continue with the buying momentum this time around to create an all-time high. So basically, if you're sleeping on this, please, it's not the time for you to sleep on gold. And this sell opportunity, how many pips are you looking at right there? It's looking like just about 2,000 pips thereabouts. So between you and me, you know what gold can do in a day. And what if, this is looking like a potential head and shoulder pattern, head and shoulder formation? What if it does something like this, and does something like this? Just what if? I'm just cracking you up anyways. But then it is what it is in the market. We're going to follow the fundamental outlook to see where the market is heading in the coming days. But this is a very strong bullish momentum on gold. And we can only wait. I personally will wait for gold to take out this low before I can look for a buy opportunity, significant buy opportunity. So ideally, this bearish momentum seems to be stronger, and wait for the market to open. And wait for how those red folder will play out for the week on gold and other currency pairs. Okay, this is on 1 hour time frame. Can you see what gold is doing right there? It has created, it has rallied to the upside, created some level of movement, and you'll be thinking that all of this price level should be taken out and be covered by gold again. Yes, of course, it's expected. So that's why I'm looking at on 1 hour time frame. What if gold just do something like this? What if we have gold do something like this? Or let's say, I'm coming. At this price level, this is a price level here. This is an imbalance level here before the low was taken out, right? So I will focus on this. Let me focus on this. Let me just use this one to wrap up for the day, for the week rather, on this weekly outlook. So what if we just have it like this? Gold buys into this price range and sell off from there. What if? Because that's, as you see it, is also an important price zone. You can mark that. That is also an important price zone. That was the inefficient price level you had before we had a series of lower price level that closed with body closure of candlestick formation pattern below the previous low. And that previous low was the last low we had before we have the break of structure into the upward direction. Now, the market has moved below it. The next thing is to wait for the market to come to any of the PDRs, and this is favorable gap or imbalance the market has moved to. If we see markets coming back up here, then we can be anticipating more buy from this market. Ladies and gentlemen, thank you for watching, and it's going to be another wonderful and profitable week ahead of you. Through proper risk management, this is purely for educational purpose, for you to see the markets from a perspective that is not just yours, and probably this will help you to realign and reanalyze your market and to change your bias. And you should also believe in your own analysis. I wish you all the best and do have a wonderful trading week ahead of you. Bye for now, and God bless you.